it's not because it's already insured federally or.
Yeah, I started doing certain IRAs. There's about half a dozen out there. I don't know the fees they charge. Some of them don't have BIC, the CAD, some of the balance is paid. Store, they use a third party custodian for the actual.
Yeah, we're good. We're good.
I kind of think that that'll be the future of things. So if you want to like and everyone to adopt it, feel like it's spiritual.
All right, everybody, thank you guys for being here. We're gonna go ahead and get started. I'm not sure if I actually need this mic or not. If you hear any feedback, I guess let me know. It's very loud in the back. So thank you guys for being here. Bitcoin over here, month of August. This month guest speaker is going to be Michael Carter, coming back again from BitsBeTrippin, and he's going to be talking about the incoming Ethereum merge and all of the complex intricacies that are going to come along with that. I know all of us have a lot of questions, and personally, I'm going to be taking some notes. I've got a couple of miners running out there in the store for mining some Ethereum right now, and very unsure as to what we're going to be doing with them after this merge goes through. So I'm going to go ahead and invite Michael Carter out, and I'm also going to tell you guys about some more of the events that we have coming up. The rest of this month, I think we're going to be actually closing out this month with Cryptoworld Coffee on the 30th with Andrew. It's going to be a Polygon meetup. So if you guys want to have some free Polygon in your pocket coming out of that event, that's the one to attend. Next month, we're going to start right off the bat again with Cryptoworld Coffee. Of course, on the second Thursday, we have our Patreon exclusive events. We're going to be going to Top Golf here in Chesterfield. Food, beer, hopefully hitting some golf balls. I'm not very good at that, but Jeff's going to teach me. The third Thursday after that is going to be again Bitcoin over beer, the topic and speaker TBD. And then, oh yeah, the 1 year, that's it. Okay, so what is that? That's going to be on Thursday now. That's going to be the Bitcoin over beer. What is that? Okay, so Thursday the 22nd, the world is actually going to be celebrating our 1 year anniversary. Technically, our 1 year anniversary was August 21st. We're just going to push it back a month, make it a really big event, have some awesome guest speakers, hopefully Carter can come out. The virtual appearances from people over in Europe, it's going to be huge. So keep your eye on your email for that detail. If you guys are not on our email list, make sure that you stop by on your way out and make sure that you get on that, because that's where we send out all of our information, all of our events. Without further ado, I'm going to hand it over to BitsBeTrippin.
So, themerge. This has been a long time coming. Anybody that has been a miner, essentially since 2015, knew that this day would start to come. We thought back in 2017 it would be there. That's when the original move was forecasted sometime in 2017. And obviously there's a few more times, and now we're evidently at September 15th. So what I was going to do is kind of go through what is the merge, what's actually happening from a client standpoint. There's a few kind of outstanding issues that I think they're still going to press through. We'll talk some concerns I have with that, and then we'll talk kind of what are miners going to do. And I was just up in, if anybody's been checking the channel, we were up in Washington looking at a pretty large farm, 1.1 terahash of Ethereum miners. So they do Ethereum, it does a whole range of things. Could do Ravencoin, could do Ergo, but right now, obviously, like most people, they're mining Ethereum, and talk about like what are they going to do? What are we going to do from BBT standpoint? And we'll get into that kind of at the end, because that's kind of like, okay, now we understand the specifics. Is there anything that could hold up the merge? And what are the next kind of few steps? So I don't know how many people actually know the technicals of what's actually going to occur here, but we're going to start kind of with that. And it's been something that I've been following very closely, not just from the fact that we've been mining for Ethereum for a long time. And I'm like, they're going to go to this network, and do I need to get out of my Ethereum? What's actually happening technically? So we've been really peeling it back. The team has been peeling it back to understand mechanically what's going on. Anybody that follows us on Twitter, a lot of the questions I often put out there are related to testing and like just concerns I have, and then just like some of the other mechanical things. Like we know that once the stake is handling all the blocks, how do they receive the block, the priority fee, as it said? That's what we get. And, we get the emission plus a fee. Like, it didn't make sense. All of that circulation stuff can go and still be locked up because nobody can withdraw anything. So there's been some pretty good interaction back with the Ethereum development team. They've been pretty quick to get back and right there publicly on how that worked, and we'll get into that. So what's happening right now timeline-wise? So on September 6th, the Bellatrix upgrade, which is the proof of stake side, activates essentially. And then roughly 6 to 10 days, it's kind of a floating target because they essentially just put a target difficulty that it's going to achieve and then it's going to execute. So if less mining happens, it actually slows it down. If more mining happens, it can speed it up. Meaning if more and more people get onto the network, and that can be for a range of reasons. We know that if price goes up, people turn on miners and it can speed it up. So there's a range. If you look on Ethereum Foundation's website that says it can happen between September 10th and September 20th. Right now, it still looks like it's around September 15th. So what's that mean? So there's a range of different things that occur here. We're going to talk now. It's essentially two networks running essentially on the same box, where you have ETH1, traditional, where the phone data, where all the stuff, the DeFi, all that kind of stuff stays effectively in place. And essentially, Beacon starts to be the consensus layer instead of proof of work miners creating a block and then handing it back to the network and including transactions in it. It's going to be Beacon handling that part. The rest of it stays the same as far as Ethereum is concerned, like the chain data, all that stuff. This isn't like the full 2.0 upgrade that has been touted for years of like, roll-ups and faster this and its own new thing setting up Beacon. It's just the consensus layer that's changing. Part of the concern that a lot of people have brought up, including myself, is that it's just added an order of magnitude of complexity to it, because now you kind of have two things going on. Not just one chain you have to keep in order. You kind of have two chains that have to stay succinct. And there's these things called attestations to validate that everything's kind of in play. We've seen in the test nets over the last 6 months that there are things that go out of whack, and there's automatic reorgs and things that are happening. And while they try to address some of it, I still don't think all that's all the way there. Is that going to stop them from merging? No. I think it's kind of one of those things that they're going to test this thing in production. And for a little bit there, it might be a little, just be careful on anything that I do from a transaction standpoint. Kind of like let it set for a second, see if there's kind of any issues. I think if you have your ETH on exchanges, they're going to do that for you. They have teams that are going to be doing that. And you can already see Coinbase and a few of the others out there have put out there saying, pretty much we're freezing everything until we know that everything is good. There is a playbook out there, what's going to happen the moment it merges. And effectively, they're going to be looking at it. And then once it kicks off, there's going to be about a 6 to 9 minute kind of delay to as it starts to complete that first block. I still haven't mechanically figured that part out. Like when you draw it out, they're blocked under 13.2 seconds. What happens in those 6 minutes? There's something going on there, but effectively, when it has to get to a finalization. Once that happens, then they know what kind of function and work. If we look at the test nets, that's happened a couple times, and then a few blocks later, then things happen, things reorg and stuff. So that's why the exchanges are going to look at it. And like block reorg, if you're not totally tracking, if you send money to an exchange and then a reorg comes in, let's say 5 or 7 blocks later, and if they settle you automatically, it's like an aftercase that should never happen, right? So they have to let things settle, make sure everything they have enough block history there, and then they'll let you post the transaction and stuff like that. And that kind of it happens right now on exchange. If you send money to any kind of simple party right now, it doesn't instantly put it in your account. They wait, they validate to make sure they're at the latest chain height and all that. So I don't think a lot of that's going to change from us mechanically. I just think that there's going to be a lot of noise for a little bit on everything that could go wrong. And if it does go wrong, there's going to be people and all that. I'm trying to get past all that and just see, is there something mechanically really messed up once this thing goes live? Because nothing that has been merged so far looks and breathes and acts like the current mainnet. There wasn't huge contracts out there. There wasn't front and back running. There wasn't arbitrage bots and flash bots and all that stuff on all these test nets. So we have no idea on how this is actually going to play out. Again, it looks like it's not going to stop them. So if you're a miner out there and you're like, okay, cool story, what do I do? Well, what'll happen is if the mining pool that you're on doesn't, upgrade or stop sending blocks out and it keeps doing it, it could essentially create like its own little fork for a little bit. It'll eventually die off. But unless there's support behind it, you're just going to be mining blocks and it looks like you're getting rewards, but none of those are going to settle on the current chain that everybody's looking at. And it's just kind of like you're keep going down the path going, they're over there, we're still mining this way. And then it just won't be worth anything, essentially. Unless Taylor Gal and a couple of the other folks that have been sitting out there on Twitter saying that they're going to fork it like they did ETC. We'll see what happens with that. Again, I would just proceed with caution on anything that you see on the proof of work, current existing proof of work moving on for a range of reasons. And as a proof of work person, I've been interested to look at how could this happen? Is there enough interest? And when I start peeling back the technical debt that's would occur if they try to fork the current state of Ethereum, it's not like they're like, oh, we did it with ETC. When ETC happened after the DAO hack, nothing else was out there. ERC-20s, there weren't token. This was 2016. This was pre all the ICOs. This was pre Ether Delta and any kind of DeFi stuff. This was pre any of the growth of the 721 and NFTs and all that. It was pre any of that on the chain. So when they were able to fork ETC, the chain was a lot leaner. There wasn't so much technical stuff on it. There also wasn't stablecoin architecture out there. And all the bridging and things that happened between all these networks, none of that infrastructure was there when they forked ETC. So for anybody to push a fork on the current state of Ethereum without changing it, it would just have like a lot of stuff on it that nobody's using, because anybody that is an owner without like we talk like MakerDAO or Curve or any of those other ancillary services that are setting out there, for them to then go and like create the ETOW version of it, they would have to use their existing keys on that chain to like access those funds and make changes or whatever, update their chain ID and all that, which means they're exposing their private keys. There ain't no way they're doing that, right? Just from that risk. And you look at that like any Bitcoin fork, right? Anytime there was Cash and Bitcoin SV off of Bitcoin Cash, you had to, if you were trying to access those other tokens, you had to essentially expose your private keys on that side of the network, which is the same private keys on the other side. So there's existential risk with that is the version of Electrum that you're using in that case been compromised, and now you've just given the keys to the kingdom on the main chain. So a lot of those reasons, the security reasons, are why I see the noise up there, but I look at it like from a technical standpoint, I'm like, there's no way somebody's going to risk $1 billion DeFi network on fork. It doesn't make sense. Just in that custodial risk. Even if they believe thoroughly that, hey, they should have stayed on proof of work, I just, don't see them doing that. So what's that mean for proof of work chains in general? Again, there is ETC. It has followed along with some of the updates and things that Ethereum has. It has smart contract architecture out there now. It has the ability to do some DeFi work. I know that there's been push to do NFT type of content, ERC 721 stuff. It has everything to gain from Ethereum's vert if you're a proof of work supporter. Part of the analysis I've always tried to provide the ETH communities in general are what's happened with other chains that have moved off of proof of work and what's happened to the communities around them. And when you look at Siacoin, Depred, you look at all these things that were 2016, 2017, very popular that moved to a different state. They effectively alienated who got them there, right? Besides this kind of new dev side that was able to put some applications out there, but like the core groups like this, people meeting and talking about, mining. There's something visceral about being able to plug hardware in. There's a community and a discussion around configuration. All of that grassroots piece that comes from mining, which it starts at the grassroots side, and it bubbles to once it gets enough liquidity and size. Then the enterprise class comes in and goes, man, we could scale that X, right? And that's the immediate thought. You're like, how can I scale up? And the community building that happens to support the chain is very powerful. And you look at what happened with Sidecoin and all these where just it kind of nobody talks about it. I think Ethereum will carry some of that kind of risk with it because a lot of the NFT and that kind of crowd would be very fair weather. They came in because of kind of new hotness, and then they kind of dipped because there's not a lot that they have invested in it, like miners do. Miners have real capital invested in it. You can physically see it and plug it in. So I think when you start to just join that community, they'll start to see some of that, which I think gravitates some of that development, some of that inertia over to things like ETC, Ergo, Flux, Ravencoin, things that are still proof of work that are accessible to GPU. With China shutting down for the Bitcoin side, it's made a very interesting play on being able to get ASICs and be part of the mining space. At least in the US, it's very popular. A lot of people look for power costs, and all that kind of stuff. I don't see mining going away. That was the first thing a lot of people asked me, like, "Yo, GPU mining is going to go away." I'm like, I don't know. I was mining when there was hardly any money in it. When there was huge community for mining, it just didn't have the size of the pie that it has now. Like Ethereum's at 850 carats. We don't know how many ASICs were. We know that the Silicon that fell off, we were setting at like 950 terahash, and then we magically went to 825 the moment those 5 gig cards fell off, or those 5 gig ASICs fell off. If there's a whole bunch of other ASICs out there, and then maybe there's only 600 terahash of GPUs out there, where's that going to go? None of the other chains out there have near enough liquidity, by example, to Ethereum size to absorb all of that. Like if we all over to any one of those chains, we would instantly make it completely where there's no profit. Like it'd be very, very low. There's a lot of models we've done to look at it, looking at what's ETC have to get to, what's a Ravencoin have to get to. All of them equally could start to go up because people start believing in what a proof of work structured network does. We see it with Bitcoin and how large capital like to take a heavy risk versus putting it all into a coin because it's all about when do you buy the coin. Or if you're buying into hardware, it's kind of like I know what that hardware is and I know a depreciation schedule on it, and I know it could resell it if something comes into where I can't handle it. Where the coin, being as volatile as it is, could be far less, or it could gain too, right? Both ways, but that's why people struggle with like, do I mine and do I not mine, right? So I think that plus mixed with the fact that you could go into any store and participate. People find our videos, get lost on the internet one night, find a video, get a graphics card, plug it in, start mining, and then like the next morning, they're like, "Holy crap, I got it!" And all they did is participate. I think that experience shared by the entire world, seeing that, it's a great equalizer and leveler. So I don't think GPU mining. What I'm saying, bottom line, is I think it'll go back to a hobby state. At a worst case, and like literally worst case, some of the large capital pieces may play to data center, like the farm that we were just up in Washington, and pivot those two parts. Same thing with like PUD 8 and some of the large institutions that had big capital and data center style stuff. They are hedging that server style pieces, fiber panel backends. It wasn't just a cryptocurrency play. It was, we could also pivot to be a data center and provide cloud services, that kind of thing. Which is, scale is that kind of like, it can't be just all eggs in one basket. They look at it horizontally and go, I need a data cleaner, high-speed fiber line, I need a good, IO interface to be able to do big jobs, and I could pivot, right? So the larger farms, and I mean, just looking at the comments that we got in the last video, I think it's up to like 12,000 views, people are like, "Oh man, they're never going to ROI." It's like, well, their strategy is a little different than like a miner. I'm not going to offer cloud services on my infrastructure, nor would anybody want to provide that with like the security risk and all that kind of stuff. So I think it goes back to a nascent community until we start to see some growth on the proof of work side. And I think Ethereum has everything to lose. BTC has everything to gain. Ravencoin has everything to gain from those discoveries. Does proof of stake work out in the way that Ethereum is implementing it? I think there's a lot of motives out there to get it to proof of stake for a range of reasons. You have the power concern or the energy usage, concept. I've never been an apologist for using energy. I mean, we literally create energy and we consume energy. And there is a natural guide and path and roadmap from the energy providers to become more green that isn't laying on us, right? We're consumers. And we can push the narrative and push them to try to make things more greener, but it still doesn't rely on us, right? It's like they have a roadmap for it, right? And by us providing the higher consumption, it provides them with more capital to move that roadmap faster, right? So I've done a few of these and gotten in front of large crowds, and people are like, "Oh, what about all the power usage?" I'm like, "It uses power, just like anything else uses power. Hair dryers use power. We're cleaning our clothes use power. It's a consumer of power, and it's supporting the security of a network. Like if there's a concern with the types of power, those are roadmaps. We'll talk. I mean, we have conversations with the power brokers and folks that we use of like, what's the energy mix? Can we use stranded power? Because I drive up 55 and come to Chicago and I see a lot of windmills and I see a lot of them turned off. A lot of infrastructure was built and it's not necessarily always leveraged and used because those kind of power connections don't. If there's no demand, they have to turn off. There's nowhere to store it, right? And then there's not the transmission to get to it, as an example. So for folks to have that kind of mindset, it's like, well, why did we build all this other stuff that's not used? It's the wrong question, I think, on that. So I try to just direct that to like, it's not a power consumption issue. So the folks that are pushing that agenda for Ethereum, it's it might make them feel better. I don't know if it really changes much. I mean, there's a mechanical thing that it's just going to move to another point. If the ETC overnight jumps to $300, it can handle 400 terahash. It's not going to be super profitable for people, but ETC has a 33% increase of yield than Ethereum because it's well over right at 3 coins versus Ethereum's 2 coins emission. If there's any sort of volume on ETC, if it gets, let's say, a volume push because they deploy NFTs and it kind of gets hot, and like Solana had it, Solana had a big push with NFTs, just like Ethereum. No doubt, another network could get a big push for people wanting to participate in that. That means transaction fees. That means you could have blocks with 3, 4, 5, 8 ETC per block, right? So it's the same kind of situation that Ethereum had, where when you started getting a lot of volume, there's a competing fee on those block times to get the fastest when they're doing like a minting event, right? Everybody's trying to do it at the same time, trying to get in the first block, and they build that priority fee up. So then you might have some blocks that are 50, 60 coins per block. That's free. So the dynamics start changing. When you start doing the linear math on it, you're like, well, EPC has to be over 150 to save the mining industry. I'd argue it needs to have some activity on it and a reason to do stuff. And then the fact that it doesn't have EIP 1559 there isn't going to burn a whole bunch of stuff. They've already came out, and DC came out and said that they're not going to, the community doesn't see that that's a benefit for ETC. They're not changing the emission schedule like Ethereum was, where they kept it from 5 to 4, 3 to 2. They've kept it at 3, or just, I think it's just under 3, but and then you look at some of the developments on Flux and Ergo, parallel assets on Flux. I think there's a lot of development in that gives us a reason as miners to, put a few rigs there. But again, it's a very personal, like, what's your current, at home, how much if you're doing it at home or if you're trying to build a business around it. I would tell anybody, I mean, we get a lot of calls like, hey, the prices are way down, graphics cards, people are selling graphics cards for no price right now. Should I, buy them? We have been purchasing some GPUs that have come on fire sale from just vendors that are just like, we're in overstock, we're dropping price. Because I don't think it's going to go away. I've went through now 4 of these full cycles, then mining with GPUs and Bitcoin, right? And I'm talking 2011, 2012. And then Litecoin out of 2012 and Feathercoin. Feathercoin didn't do too much, but Litecoin ended up doing pretty okay, what you can mine for GPUs. And then you got was mining Dogecoin for a long time. And going from Doge, when Doge went over to with Script in the merge mine, then pretty much right into Ethereum. There was a little lull where there wasn't hardly anything profitable on the GPU side in late 2014 to the beginning of 2015 before the launch of Ethereum. So like January, February of 2015, there's hardly anything out there really from a GPU standpoint, but there were still people GPU mining. There were people GPU mining. I had helped build some rigs that they wanted to do it for Bitcoin. I was like, that's a terrible idea. But I went back and looked at that. It was early 2014 into 2015. Those rigs would have made 5 to 10 times what they were worth, because even the incremental amount of Bitcoin, because you were competing with the ASICs, still was worth quite a bit. I mean, we're talking like 0.03 Bitcoin for like a 3-card rig back in the late 2014, right? Because a lot of ASICs were out there. But you start doing the math on that, and they're like, well, at $50,000 Bitcoin price, that was way more than worth it. And I look at that right now. If you're looking for being a service provider from a security standpoint, meaning you're a miner, and you're looking at your longer term play here on if you're doing it to stack sats or stack, Ethereum, because a lot of people take their coins that they get from proof of work and they turn them into Bitcoin. They're looking at it as a funnel, and then some people are looking at it like they're maybe a developer or a builder in these different applications. The community is everything. So if we look at how Ethereum became what it is it's huge development for, and people that were trying to build created services and features that brought a whole swath of new people in. You see like Jimmy Kimmel and like a Bored Ape Yacht Club on his Twitter page, right? I mean, like those folks would never have visibility of crypto in that space if developers weren't building this new industry around the concept of a more direct line of ownership to an object, right? To where when you really peel it back, people that don't understand the power of like an NFT, the fact that if you do have somebody that's very creative and you look at all of this stuff that's been built in between the person creating it and the distribution of it, you can start to lean out some of this stuff and make it more organic for people to be able to get paid for what their work is. So you look at the GameFi market, you look at some of these other markets that are able to take a creator to what they're doing and then channel that to some more royalty design. That is going to be some level of a future. I mean, I think that infrastructure in place, because it leans it out. At the end of the day, no matter what people think about it, it leans out the existing process. And that's where, like on my Six Sigma side of it, from like process improvement, I look at it like this process right now for like album cells and pictures and art and all this stuff has this long tail of people involved in it for whatever reason. There's rent seeking on it, to where now you can lean that down into a smart contract. You can add participants in it, and then all those resells and all that stuff you're just organically getting through the process. That kind of stuff is what drove, I think, some of Ethereum's folks to it, to being the counterparties that are buying the Ethereum. The bag holders that were in it from the very beginning are just like, go merge, because they're seeing that as progress, because that was on a roadmap thing. They may not completely understand the fact that they're going to lose an entire community that was supporting them because of some other narrative. But that's been important. I've tried very hard to help educate, like, bad. We've literally helped to uphold this network for you, like, and made the capital cost and risk to uphold the network. And then, just the way it's, ending, it's a little sad. But like, we'll see. We'll see how proof of stake works out for Ethereum. There's a huge amount of technical debt. I mean, I don't want to get so technical into it, but like, I think coming out of what I'm going to be looking for is September 9th, there's a demo that is going to talk to, like, we're about to merge, here's what's going to happen. I'm going to be really listening to what's going on. There's one of the primary clients on the execution layer. So there's the consensus layer, the proof of stake side, the execution layer, the kind of existing Ethereum side. And those two things are going to be running simultaneously on a node. Which right now, they're kind of bundled up right now together as the proof of work side. And it's a little more symbiotic, where this is kind of like two separate networks. Like Beacon's been running itself, and now people that have Beacon validators have to install the execution client next to it. And there's this like API connection to them and they got to share like this JWT key. I'm just like from building large capital systems in my history, anytime you have like asynchronous kind of communication between two systems that were built by kind of different folks, there's always issues. And that was one of my biggest concerns in this whole thing. I'm interested to hear what they're hearing on fixing, like Yelp has a critical issue. I don't know if it's been fixed yet, but that's like 75% of the main clients. So and if you like you upgrade the version that they released, it like nukes your entire database and power it down, like it comes up. And I'm like, that's a bad bug. That's like what we call in like the development world a fear stopper typically. But you know, that's the kind of stuff that concerns me. I don't think it breaks anything. Like you're not gonna lose your ETH. That stuff's out there on chain. And your private key. But it does add risk in the applications that are built on top of it. That if you go to move your ETH a few weeks later, like if somebody compromised the library or something to that effect, it makes it, you know, a little more risk. I mean, people on a few of the other proof of stake clients had this kind of issue where I know I wasn't Phantom wallet. There was another wallet that was on one of the other networks that had a shared library that got compromised in people's wallet. Like you're literally just sitting there in your wallet, you haven't done anything, and then it's just depleted, and it's gone. And it's like people are like, "Well, wait, what happened here?" Right? You did nothing, and it was because the software you had in your computer, one of the libraries that run it, was compromised. So that kind of stuff is the stuff that scares me with it. It was like, you know, as they start to make big changes. I think it's best just to like wait for a little bit and see how it works out. But you know, any big change comes with that. Our change comes with that, and this is like not just a ceremonial change for Ethereum on the merge. It's like literally a technical feat. So we'll see. You know, like how that works out. I've talked a lot and pretty quick. Obviously, it's been on my mind for a bit. Kind of jumped around a little bit. I do want to have some time for some questions. I know we're live streaming right now too. And for the live streaming folks, if I miss any questions, I always put I make sure that all of the stuff that you've asked or if there's super chats, any of that kind of stuff, I will address them in the comments below for the folks that are on the live stream. And then we'll probably have another video in studio to talk this, but I want to take some questions in here if you got any technical questions with what's going on the merge. It's kind of flew through it.
Got millions of questions.
We'll try to brag them.
Trying to limit them. Is there a reset button if it doesn't work?
No, this is a one-way switch. So there was, I think everything's reversible. However, I think what it does is they break a lot of glass. If they merge and it freezes, I think they're just going to work through it. I think what's going to happen is if it, this is one of the things I was trying to look at is like what physically could happen. Like if it just doesn't kick off, both networks freeze for a second. I think if it doesn't execute for whatever reason and it never kicks it over, they could go in and just kick it down the road and just take the TDD out, look at it as like a few blocks that are broke, and then keep looking. Technically, like thinking about it, I know Tim Binko hasn't come out and said that they could do that. If it doesn't pick up that and finalize on the proof of work side or stake side, because essentially what it's doing is proof of work is all the folks that are looking and ready for it are going to upgrade their clients and be ready for the thing that happens. And then it's going to click over and now it's past that state. If they come in and do like effectively a restore the node on a particular version, and then everybody says, this is the version we agreed on at this block rate, technically, that's what would be all projected. And then everybody would be looking for miners to mine block, and then it would just continue on. And then they could resend it. If it clicks through and then consumes the consensus from Beacon, and now it's effectively just pending finalization, I think they'll just keep it on the proof of stake side and try to fix it, try to nudge it over and get it to complete, make a hot fix on the client side, and then put that out there. Everybody, kind of what looks like with Solana's freezing up is they look at it and go, crap, everybody download this hot fix. and when they're saying everybody, it's literally anybody that's running a node, validator, all that stuff. They'll push those hot fixes out. People run them, restart their clients, and then it starts to pick back up. Proof of stakes are not waiting. It's deterministic versus being random. Like mining is random. That's why we're all mining. We're all competing for the chance to find the nonce to be able to create a block and get that right. And then we get that block, we earn the emission, and then we look at a list, the mempool, and say who's paying the highest. Fill that block up. Put all those transactions in there. NEV, which is the thing that happens along with it, is a way to look at their memory pool and go, that's an interesting thing they're doing there. They're making smart stuff. I have money on the side. I'll actually do that same exact transaction, pay a little higher, and include mine instead, and get effectively dump those folks out and then take that arbitrage themselves. All of that is going to happen on the proof of stake side now, and it's determined, meaning when it goes and clicks over for a full epoch, which is just a range of time, it's going to select all these validators that are going to be in order and who's going to win it, right? So it's determined. So since it's determined and since they know how to restart it, I think that they're just going to work through any kind of bugs with it, and they're going to be since it's super hard to coordinate that on a decentralized standpoint. And I know there's a lot of memesters out there and you centralize and all this. Today it's gonna be a whole bunch of developers and a whole bunch of client teams sitting in their respective areas, all watching this, all on like a Slack panel going, oh crap, what are you seeing? And then they'll have probably major exchanges as part of that, just from a coordination thing, to make sure the exchanges aren't messing up and everybody's on the same page. So it is an orchestration that can occur. I think they'll work through that from an orchestration level, and then you're able to parallel a lot of really smart people in the same room, essentially, because you're gonna have all your client teams, you're gonna have all your execution teams, your consensus teams on the consensus layer, and then you're essentially gonna have all the smart engineers of every major node provider and stuff in that same kind of able to communicate with them. And I would assume with that much brain power in there, they're going to fix through some of their issues. It's just like, what's the impact that it has on the network and the confidence that people have, because then it's going to be compared to what's happened with Solana and all these other networks that they just have rebooted. And then what does that say from a centralization standpoint where everybody can get into a room and make a decision? It's not very decentralized in that kind of concept. And I think that's where we're seeing like the tornado capitalism that's going on right now, like censorship, all that, and cloud providers start to shut down Lido and a lot of those large staking services because they're all sitting on the cloud anyways. Versus all of us as miners have miner making their group. I have some in here in Cryptoworld. I have some. There's the ones you guys see in Washington that I was just at, and people in this room have miners, right? So it's a lot more, purposely decentralized.
Yeah, just one other question. So how long after the merge are you anticipating that we can do withdrawals from our staked ETH on the Beacon chain?
How long until they open up that? So the merge is considered the Paris update. So there's Bellatrix, which is the update for proof of stake on September 6th. September 15th is Paris. And then there's an update after that, which they're targeting to unlock the stake. The issue I've had with all this the whole time is that their incentive, if this thing pumps hard, if everything goes right, they have zero incentive to open up that stake for people quick, right? Because they're seeing that, hey, there's no new emission being introduced back in circulation. And if they're correlating that to because now there's not miners selling, what's their incentive to make it fast? Now that's not saying they do that. I've always looked at it from this as an incentive game since the beginning for all this, and what gives them the incentive to make that 2 weeks from now, or a month from now, or 5 months from now? Or is it like when everybody staked in December of 19, 20, and 20, and we've been waiting a year and a half for proof of stake to happen. Right? So everybody's coins have been locked up. That's where you STE, right, which is the stake ETH Lido side, which is an ERC20 that you can go and trade on behalf of your staked coins. They just effectively, it wasn't a reapplication because it's not there. It's a one-to-one with how many staked ETH there are on Lido service. But like Coinbase is an example, just did it, right? So Coinbase CBE stake, CBE, Coinbase announced, I think yesterday, is if you have staked ETH in Coinbase on their service, they're going to make a new token available that's equal to your stake. So if you need to get out of it, you can sell it. So I think they're going to use this as like a wet until they actually mechanically allow you to unstake your ETH. It's going to be like, here's an IOU. And we're going to be sure that the IOU is one-to-one with how much stake there is. You know, it is an ERC20. It is on the network, so you could be able to see it. It all comes back down on the centralized services that their books are what their books say they are, right? Because it's not on chain, right? So as long as, you know, Coinbase, which should have audits to show that they're not printing more CDF, they say it on there that they have 4 million or something. In reality, they're selling on the order books 8 million. They have a very big disincentive of an audit to not do that, but that's not to say if you see other variations of that, or that could be less than ideal of maybe their audit or where they're at in the world, I would just be careful if you're staking. I think that's going to be the next kind of game, is that if ETH doesn't unlock your stuff, you're going to be like, hey, come, we provide 18% rewards on your staked ETH coin, whatever version of its stake thing, and now they're just creating supply. That's part of the risk with that. So I would just be cautious on it. And you're seeing already, right? So there's when I looked right before this, SPE is going for 0.97 of an so it's down 3%. So there's a 3% arbitrage right now you could have on staked ETH if you just bought it from Lido. Because at the time of the merge and at the time of the unlock, if you were able to buy that, you could redeem that 1-for-1 for an ETH. So there's a 3%. And then that went all the way down, I think, to 89. So it was like 11 to 12% gap there for a little bit. And there was some concern if they were to flip the date, because people just needed to get liquidity. And then there was a big margin call, and you saw a deep hanging of STETH. And I look at it as a future price. That's effectively what it is. If you can't move it out of state, and then you have this thing that represents that state, then what I'm doing is I'm buying the future of when I can unlock that it's unlocked. So if you could find that arbitrage, the people that were buying it at 13% off now are holding it and have gained whatever ETH has went up in value plus that 13% gap gain, right? So it's going to be an interesting way to see that when they unlock it. Any more questions?
Where do we go from here?
So I think right now it's going to be all eyes on this merge. It's going to be if you're mining, it's what we've been trying to work with people. It's just showing how does your stuff run on other tokens. I mean, there's a handful of other stuff. I think Caspira. There's a couple other smaller tokens that just don't have a ton of liquidity. I would look at. I think a lot of it drives on its success here or its initial failures on the proof of stake. If it has a hard fall, I think it's going to be a C that brings down some of all the chips for a little bit, because people are going to lose a little confidence. We're going to see a pullback because it starts to freeze things up. That's why I'm not sitting on the sideline going, man, everything fell and it's going to be sweet. It's going to be like, no, that's I haven't. They don't. And I think it'll have an adverse effect. Like people are going to lose the message that, oh, there's other things to mine. It's going to be like, oh, you just brought down the whole thing with this. There's a lot of vested interest in it, of it working. So I think its success is key. If you're a developer and you know a little bit of development code, it is worth your time to go out there and see if you can break it, because they have 4 times the reward right now on bug bounties of $1 million. to find a bug bounty on any of those execution clients, pre-merge. So like, you're going to talk about being able to, and it comes with, you don't have, it's not about sometimes having a whole bunch of experience in it. It's literally some of the craziest bugs and mistakes in this space has been from people that don't know anything about it, but know a little bit about code and read through like Go or Rust implementations, and even some of the Viper on the ETH side is Python, and they're just looking through it and they're like, what's wrong? Let me pull that execution. And I mean, one of the large DAOs, one of the first ones that were out there that was holding a multi-key signature for the liquidity on really like pre-DeFi. They had all their stake essentially in this smart contract that somebody called kill coming up on it. They're like, that doesn't make any sense. And what it did is it simply burned the entire supply that was in this, held up there, like $180 million. That was like $300 price. And it was literally like, probably should have believed that first. And they were like, we would have paid you a bug bounty for that. Like, why did you call that on the mainnet? Like, why do you have that kind of bug in the mainnet? But there are options out there where you can, if you're a developer and you want to take a roll through that code base, all the GitHubs are open. That could be some good bug hunting when you bug hunting like that, and it could be with next to no experience. That person, as an example, had hardly any experience, but they do Python. And you know, you have that with Go, Rust, a couple of the other C++ implementations out there. And you don't even have to really know what's going on, but you may be able to see an error in that, and then just submitting. They have a whole web page for their error submissions and say, I don't know anything about this, but that looks wrong. Submit it, and they may discover, oh crap, there's a buffer underflow up here, and man, you just saved us all kinds of stuff. And then that would qualifying for the, even the partial bug bounty. So I think from where we go from here is, if you can help them not mess this up, then I think it helps the industry in the long run. This wasn't an arbitrary, he just wanted to move to proof of stake, right? They've been saying they want a proof of stake white paper. So I've always had this love-hate relationship with that kind of stuff. As I've learned more and more and seen implementation of proof of stake, I haven't been convinced. And if anything, I've seen that how it creates the wrong incentives, I think. And it starts to lock out participation a little more. The node structure automatically gravitates to the least common denominator, which is going to be a cloud base. Like if you could go on to a cloud and it already has a Ansible script or a Chef script to just kick off a node, and then it syncs, and you pay $9 a month, and you're like, I'm participating, and let me throw my 32 ETH in here. Sweet, now I'm online. Or you're going to buy something locally and now have the risk of getting slapped or falling out of sync because maybe your home internet sets it. It's just a different animal. I know that people want to, I could run it on a small notebook and stuff. Yeah, but you're not going to plug in all the time. You're going to close it. People are going to out. Like it's, and you're only 32 ETH locked up in a node right there on your desk. I mean, like, it just doesn't make sense in a lot of ways to do that from a decentralized standpoint because of that risk. If it evolves and it changes like what Rocket Pool is doing, where you could participate in a stake ETH by just putting 120, I find that interesting. I would love to have a client implementation that I could go out there and say, MetaMask, connect, 0.1 ETH, I'm staking decentrally. It's a more easier engagement, I think. It gets more people into it. But they're kind of there with Rocket Pool. You can go to Rocket Pool's website, but then it's hosted on the cloud, and that's where it comes into censorship resistance and like censorship issues, where the proof of work just has a lot longer tail on it, I think. But and we'll see. So I don't know if that helped answer. Kind of went around a whole bunch.
So you're gonna diversify? Are you gonna mostly go to ETC mining from here or Ravencoin or?
So we're already set up. Well, I've been mining ETC and Ravencoin for quite a long time. I haven't done as much Ergo and Flux. A lot of the GPUs that we personally have, I don't have a ton of NVIDIA stuff, which is really where the Flux space is at. I always have a couple like long-term plays or things that I like what's happened. There was eGem, there was a couple other ones that I put a couple of rigs on. just to see if it got any kind of error movie. But I'm gonna have some things for spec mining. Always do like seeing new projects. There's not as many anymore. I think a lot of that people are gravitating to larger teams, and I think they're gravitating to larger teams because that's kind of where the funding is at. Where before there was like really no funding, and it was just people communicating and then working their day job and then working the night on the space. Still trying to find some of those that used to be posted all the time on the Bitcoin Talks forum, on the announcement post and ANN post. Not a lot of those anymore. And if they are, they're kind of scammy. People just trying to get some keys or get one of your computer. But I think getting behind some of these, the Ergo, the Flux, the Raven, and the ETC, I think are the big ones. I'd really like to see what ETC is going to do with this newfound spotlight that is coming on it. It's the easiest transition for everybody. You go into your miner client and you type ETC, save, and then now you're mining ETC on whatever port. Like if you're on Ethermine, you change the port ID on it, you add ETC in front of the first part of the URL, and on your miner you type ETC. And the only reason why you have to switch up from ETC is because they changed it to hash versus S hash. Because of a few minute changes in that, one of them, the 51% protection that's in it. Actually, all the top coins have some level of 51% protection. Raven coin has the ETC has MES, multiple exponential subjective scoring. Long story short, it's just if somebody tries to reorg it, then they come in with 37 times the current network. It says, I have a longer chain. It's like, cool, you have 37 times the current network, which would be right now over something Ethereum, which is pretty much the entire world wanting 51% at the same time, which benefits nobody. So, yeah, I'm really interested to see what happens with the.
So I'm fairly new, only mined Ethereum. I see my $900 electric bill. What I'm confused about, it's like, when we do go to a different coin, does it demand the same wattage from our GPUs?
ETC will be, if you're mining ETH, right now, ETC will be the same. Ravencoin would be more unless it's configured, but Ravencoin uses more than GPU. So ETC and ETH it's very heavy on memory. And if you haven't tweaked anything, you're going to be still on the same because you haven't adjusted your clocks down. But you can save power on Ethereum and Ethereum Classic. Ethereum, we can still mine it for this month, and Ethereum Classic, if you just prioritize the speed on your memory and lower your clock speed and then lower your movables on your core down, you'll save huge amounts of electricity on your clocks or on your farmers. Ravencoin uses a lot more of the core, so it uses more energy if you let it. So if you just don't change anything, which is usually the standard for Ethereum or for Ravencoin, is you really just don't mess with the clock too much. You just let the card do its thing. But you'll create a lot more heat, and you're going to use about 30% more power by and large. What I usually do is downclock things and downclock the millivolts on it, and I take a small hit on for instance, like 5700, get like up to almost 40 mega hash on the card, or about 30 mega hash on those cards, or you can do 22 and save more than half the power. I take the 22 and half the power and less heat. I'm taking the 8 mega hash hit on it, but I'm not using near the power. Ergo uses the least amount of power out of all of this. You would take a smaller. You could reduce the heat and the power by almost 20% by mining Ergo, and you get a little more mega hash, but it's proportional. So everybody gets more mega hash. It does use less power, less heat generation, and Flux, depending on what GPU you are, it's going to be up there close to Ravencoin. You can use quite a bit of it's a heavy core type of algorithm. So yeah, all those are pretty heavy, but it's kind of part and parcel of the thermal dynamics. I mean, it's like, what's the max capability of the card? What's this power draw, the TDP, and how much performance can you get with it? And it's just a measurement of what's the performance versus the power that you're using, and trying to find the most optimal for your setup. But yeah, I mean, it's going to be, all of them are going to be expensive. And I don't know what your power rate at home is. Most folks are around this area, around 12, 13 cents per kilowatt, which is these days pretty say it's cheap. It's still, I think, pretty high. But yeah, I mean, on the Illinois side, there's a little better power situations. You can get all the way down to 9 cents per kilowatt over there, like having a home commercial set up. And then if you put a megawatt plug, you can get 3 cents. It's you know, I see a longer term future state of like some of the co-locations and stuff, and how more power infrastructure being tasked in the US in general, at least for us. And some of the off-grid stuff of people creating more co-lo facilities. One of the ones in Washington we were just talking about, and we're going to be having on the show soon in Bit Capital Group in Washington, just secured another megawatt up in Washington, and they have an GPU. They host GPUs, and they have a very competitive rate. So it's where it's like more of a co. So you're getting a pass through on rate, because most places can't charge you. If they're charging you an upfront rate, probably not within the terms of service of the rate. Like our deals that we have over in the Illinois side, I cannot charge you more than I'm not paying for power. It's illegal. So, because I'm a reseller then, but I have to give you a pass through on the rate, but then we would do the service, right? So then there's a service fee, but probably those two things combined all in is still cheaper than if you were doing it, right? So I think that'll be kind of the future state, because of all these power broker deals that are going on in the US, and then you're going to start to see a little more home location opportunities that are cheaper power and allow people to be part of it. And then it's just going to be rack space discussions.
So what I hear is I'm going to be paying the same amount, or let's just say roughly, for electricity. But, you know, right now ETH is at 15, 17, whatever. And Raven Coin's at what?
The Raven Coin's about 3 cents. So the distribution is a little different. So ETH gives you 2 coins per block every 13 or 15 seconds. Something like Raven Coin is 2,500 coins per block every 1 minute. So the ratio of amount of coins is a lot higher. So the fact that it's 3 cents all comes down to what's the difficulty and how much are you getting. So if you're getting like 300 cents, yeah, but you might be getting like close to 300 coins on a day, right, per day. And then that's where the algorithm starts to play in, where it's like Raven Coin at its peak last year was at 27 cents. So if it's at 3 cents right now, and the rig's earning 160 to 200 coins per day, and then that shoots to 27 cents, well, that rig was making a couple $100 a day, or $100 a day. So that's effectively what the generational stuff that we went through with like Bitcoin and Litecoin. Like when I was mining, you couldn't Feathercoin for a little bit there when I was almost $1. But it was like we were earning X amount of coins, point rumor tweeting out the jalapeno, Bitcoin first ASIC, it was 8 gigahash Butterfly Labs. And I posted it, and it was every week I was earning 0.3 of Bitcoin. And it was like this little, $300 unit that took like 6 months to pass, and I was supposed to be delivering. And I was like, this is crap. Bitcoin at the time was like $80. And I'm like, never going to pay this thing off. I was getting 0.3 Bitcoin a week. So it's like, right. So like, and same thing with Litecoin. I had rigs, remember I had the dual GPU 7900s that came out, which was, 2 chips on one GPU. These like 500 watts of power. I had $800 power bills at that time. I actually had the power company come with the local police department thinking I was doing something there, because it was like way over what I was supposed to. And I go them through this setup. This is like circa 2012, but trying to explain Bitcoin and all this stuff. It's not illegal, I swear. And just looking at even then, like paying those, and like the Litecoin that I was earning at was like $350, and I had like $600 bills. So I was like mining out of loss. So I was like, I want to get more Litecoin. And there was a BTCE, which was like a Greece exchange ran by Russians, which ultimately got shut down. And then Coinbase was just coming online. So there wasn't a lot. And then Mt. Gox already was going through Strava. So it was like there was nowhere to buy it online. So the only way you could get some of these coins was mining it. So it was a very different type of experience at the time. And then maybe you find somebody online and you could trade with or something. But like, and local Bitcoins was starting up then too. So I look at it like none of that formula had changed, like from a community standpoint. All of us sitting in a room and liking the understanding of being able to participate in mining. There is a lot more nuance in the numbers and making money and all that kind of stuff now, especially at scale, and you're putting a lot of money in hardware. Hardware is actually more expensive now compared to what it was then. My 7900, I learned over like $500, and I was like, that's a lot of money. Most of the other GPUs are $200. But we used a lot more power then than what we do now. It's a lot more efficient. But it was still, I think it goes back to that kind of safe for a bit. And then people that are on the fence of like, oh, mining's dying, you're kind of cheap GPUs right now. So it's like, if you find spec mining for a little bit, you'll see a retraction on the network. And you're going to see a retraction on the network, not because there's blood in the stream from all the home miners. You're going to see home miners, by and large, aren't so vested in where they can't fire off and just like, you know what, I'll let some dust happen on them. And it's been fun for a bit. We'll see what happens. The enterprise miners, if they didn't have a play to pivot to the cloud stuff, are the ones that really get hurt on it, because they made a very big capital commitment on it, all the investor money to try to see if Ethereum was going to keep slipping date, and now they're kind of in a, well, there's not enough liquidity to stay powered on, so they're also going to power down, and you're going to start to see it collapse really quick on the hash rate. We've seen that a few times now. Ethereum, like, the very beginning of COVID, March 16th, I remember the date, March 16th, 2020, the Ethereum network went all the way down to like 130 terahash at $86 ETH price, right? So $86 ETH price, 2 coins per block, 150 terahash. The ETC network went 35, 40 terahash, and it just went from 25 to, so it's still not, it's a fifth of what ETH was, and it's at like 40, and it's 33% more yield. So I'm looking at it like it could take 200 terahash right now, and if it gets a $20 bump, it's effectively, it feels like March of 2020 for Ethereum on ETC, and that's at 200 terahash. Just because I have a 33% increase in its yield by comparison. So now I'm not saying March of 2020 was great. It was terrible. If you were making like 11 cents on a call per day, right? But it was just still showing that the network could support hash rate. I think that hash rate growth shows that security size. Part of what keeps Ethereum doesn't have 51%. It doesn't have a 51% protection, right? It's got massive size that protects it. So UTC or Ravencoin gets a massive growth rate in its hash rate size. People start seeing that is a confident network that has a lot of security and structure behind it. People start building. They start seeing that, and with everybody talking about how can we help the community. I mean, most of the people that reach out to me these days that are looking at how they can help. Are they a developer? Work on nights? I don't know. I've never coded in Bitcoin or coded anything. And I have like literally a bookmark folder that's just all the like how to get started in coding, how to get started in testing, how to be a tech writer, things that help the community, and things like Ravencoin and Ethereum Classic that need that growth. I think that starts getting the community behind it. They already have us as miners supporting, right? So I think that's where it's at. Capability, development, and then it'll start to grow confidence, and you'll start to do verticals around it. It's all about the algorithm too. People always said, what's going to happen with this ETH merge? I think in the next couple of weeks, we're going to see a lot of news about where the hash rate goes, which is going to put a lot of spotlights on BTC, Raven, and we'll start to see interest in that front running. They may be buying the news, and it could fall off, but I think they're going to start to see a buying of that news of where that hash rate's going to go.
And lastly, so you talked about tweaking the cards.
Mm-hmm.
Where do you go to learn how to do that kind of stuff?
So what I would suggest, and there's a lot of people even the stuff that we used to do, there's all kinds of folks now that help with this. So the first thing you would do, and that's a great question, and it would seem very normal for anybody that's been in mining for a while, but finding what the GPU that you're using, like going into like YouTube and just type in network, type. Like, so if it's a RTX 2060 ASUS 6 gig space Ethereum hash rate or Ethereum config. And what you're going to find is if you add those words and a search, even on Google, of the card type and then the network you're looking at, you're going to find a range of different videos now with like effectively proof points. When I set it to this setting with these 3 other settings in whatever OS, if it's Hive OS and Simple Mining if you're using Windows, and just changing the settings using Windows, you'll find somebody out there probably covered it for, in my case, probably a 3-hour live stream. You got to kind of scroll through or go into the description, or somebody did a video on that particular card and give you their rate. And I don't think that's going to change. Right? I know for me, I'm waiting for the 4000 series. I know Nvidia is freaking out because their stock is tanking, and I saw some reports today. They're like, "Oh, we'll recover." It's like, man, you haven't seen wait until September 15th happen. Like, it's going to give a surge of GPUs out there. Because I mean, it's like anything. There's like, I don't even call people kind of fair weather on it. I think it's just like, well, there's a lot of folks that come into it and they see a lot of noise on it. They see the growth and they see the TikTok and all the just influence of like you're making X. Most of the videos that we make, I don't really tell you, hey, there's a calculator out there, but here's an observable before we get this stuff. And then everybody's situation is a little different. You might have, I mean, there's kids in college dorms that they have sunk cost and power because they as in their tuition. So they have a rig in there and they're venting it outside. Like I get pictures, like the pictures I get are hilarious. Like people, like you and we had, they have like covers over it to make sure like the janitors don't see what's in there. But you have all these different like subsidized situations where people can participate, and you'll see networks that like make no sense. Like, liquidity. Why is the hash rate like this? I think it's those situations. People look up and down the stack of different tokens, and they're like, "Oh, that's too much. 3 hours. What's the maximum yield I can get for the stuff?" And then you find people on these different tokens, and maybe there's 2 exchanges in the world that does it, and there's some counterparty buying them, adding liquidity to it, and then they're just exchanging it out, and they're like, "We found some sweet deal." And that I think that's part of the fun of the spec mining side of it. Is part of it is that kind of fun, and then part of it's also like what this team doing differently. But again, like Ethereum and a couple of these bigger teams kind of sucked up like gravity a lot of that effort because they also were able to incentivize people to come over. Right? They said, "Hey, you want to develop work? We'll pay you. We'll pay you in ETH, and we'll pay you in some other derivative token that we hope is going to do good." I mean, if you do any kind of deals with Crypto.com and all them, they'll try to give you CRO. I mean, it's like, there's always these incentives now to try to pull the brain part to these different tokens and stuff. Yep.
Yeah, so first thing, I think I'm gonna need access to your documents you were talking about as far as Bitcoin development.
Yep.
That I'm starting to get into as well now. And the other thing I wanted to ask you about Flux, which you mentioned a few times. So just double check, are you talking about the cell core that is now Flux?
Correct. No core now Flux. Yep.
Can I hear your thoughts on that project overall? What do you think of it?
I think they have a very large community. So Flux has a community. They're trying to do a couple different things where they parallel assets and other opportunities to use of the GPU. I know I had a brief time with Charles Hodgson when I was at CES, but that's Cardano, and he was talking about a proof of useful work algorithm they were working on with Cardano, and they wanted to try to share with somebody at some point. I think Virgo was trying to pair with them there for a little bit, but like from a tip of the spear trying new things, I like them for that. I think there's good wallet support. They have a range of different assets and services, nodes, good tools that are behind it. The things I've always got hung up on them is anything that has a built-in dev fee and built in or any kind of pre-mines, which I don't think they'll part of pre-mine, but I think they have a built-in dev fee. Like part of it goes to the development, of it. It's one of those things that it's like, if it's built into the protocol level, there's just such like, I just think of like running development teams and just being part of large corporations and stuff, I think it kind of pulls that kind of effort. Like it's baked in, your money's coming, and there's not that hustle on it. And I think that if it's already built into the protocol, it's there. And if you're just dumping, you're dumping on the protocol. Where if it's like outside capital investment, it's different. Meaning like development on Lightning or Liquid on the Bitcoin side, or any of these other ancillary services, or even a core development is financed and paid for in fiat to a developer to work on that, and it isn't touching the coin. It's not in the protocol, which means I'm not going to have that auto sell pressure for the teams to do what they're doing, good stuff, but I don't have that built part and parcel to that particular coin. The coin gets to manifest and do the things from utility service. I think that's part of what happened with Dash. Now Dash, nobody really talks about Dash anymore. But like when it went to the split house where it's part node, part ASIC mining, it happened the same way. Once you lose that kind of AP core, and have like built-in incentives to pay people to do things out of the token, I think in theory it sounds good, but then it doesn't self-confirm on the token. And if there's not a lot of liquidity on the token, dev teams are expensive. Like developers could get paid well. The problem is if it's coming out the base of the token, on a large enough dev team, it's going to put some sell pressure on it. And there's just not a ton of liquidity out there on that. And we see it with like Ethereum. Like Ethereum is a perfect example. Ethereum Foundation, a lot of free, they minted ETH for themselves, right? In the very beginning, and granted, a lot more ETH has came out since then. But then Vitalik now has and it makes you wonder, like, when you come out and you see Ethereum Foundation for their average dumping at the top, market starts to crash. It's like, well, the last one is like 80,000 ETH, and that's going to put some self pressure on this. So again, I think it's like we have multiple examples of at a protocol level if they're funded. I get it from the ICO, and like that was the whole point, is that you could self fund it. But then if you're a token holder on that counterparty side, you're just holding the bag of the team that helped set you up for selling down. So yeah, I would like to see them have funding separately, or do some fundraising that isn't necessarily set to the token. And I think that's essentially what some of like Ravencoin as an example, Foundation took some donation in Ravencoin, but it had capital coming from a couple different companies that helped them kind of spearhead it. And then they pick in other donations that are not just Ravencoin, right? To sell down the Ravencoin price. And I think that's just a healthier way to do it. But that it doesn't put anything against Flux with that. That's my opinion personally of when I see the economics of it. And see, are the incentives set up structurally right? We're believers in it. We're paying for our cost, but we're getting sold against on the people that are developing it.
Well, thank you for the in-depth explanation. I guess that kind of leads me to my follow-up question, which is like, how do you decide what coins to find on a long-term basis, right? Because take Ethereum, for example, they've always had the plan to move to stake, so you could say, okay, mining for this is never a long-term plan. But for other tokens that's harder to say, like Block, for example, you don't know what's going to happen with that. Should you invest in some mining infrastructure, some ASIC foundry, they use ASIC for Block, but
Yeah, GPUs.
right.
Yeah, it's so. I mean, for us, we've kind of split the house with both ASICs and GPUs. For the longest time, I've only been GPUs. I tried the ASIC game in the very, very beginning, like Avalon A1, Spontaneity Tech, SP45, some of the early, and then I got burned by KNC. I bought 2 Titans, never got them. That was a lot because I paid Bitcoin. I paid for those in Bitcoin. I want to say it was like 40 Bitcoin for each of them. Yeah, it was a lot. I mean, at the time, it wasn't. Those units were 10 grand. So you do the math of what 40 Bitcoin at that time was. And then they went under, right? So there was this model where you had to pre-buy everything and then hope it. And it was just because they had to capitalize the taping out and all the stuff, right? They were like, hey, we got this plan and it's going to be great. And then things happened. And it's not like the KNC team was pretty straightforward, but it was just like they ran into technical hurdles, couldn't deliver on what they said. The Titan was terrible. ones that did get delivered didn't run very well. And then they went under. The same kind of thing happened with Sponduli Tech. They were a great company, really great product, kind of just faltered. Bitmain kind of came in, kind of sucked up a lot of the knowledge. And there was a split at some point with Bitmain. There was, especially around the Bitcoin Cat kind of fork, there was some split within the company, and you had like MicroBT kind of come out of that, which has like, the M30Ss, M30S pluses, the what's miner stuff. And we had enough cycles on the supply chain down to get some consistency, some confidence that stuff was working. The S9 really proved that. The S9s are like phenomenal. Like we've done some cleaning of some S9s. I've been like next to evaporative cooling, and it looks like a rust bucket all the way through. It's still hatching away, no problem. It's amazing. No, I'm just like, this is gonna create a platinum heart. I swear. It's just still running. So they've been tanks, and they showed like there's some resiliency in the stack. So then it gave me a little more confidence in the ASIC cycle that I'm not going to just get a bunch of stuff that fall apart. S9, S17, they almost lost it because S17s have been terrible. Like 50% fail rates, chips falling off. They did some design fixes. That was right around the same time that MicroBT kind of split off on them. So they may have lost some quality assurance with that. 19's a lot better. Still some quality issues I'd like to talk to Bitmain about when it comes to like fans and stuff. We've had a few fans go out more than I'd like, and a few pack boards. But the quality and the fact that China, not because they wanted to, at least the miners shut down, it gave us a whole new opportunity to participate. So we have good confidence that Bitcoin's not going to go proof of stake or anything. So we went with a longer term outlook on Bitcoin mining on the ASIC side. I think that's the longer term better play. If you're going to do it at scale, if you're at home being a participant in it, I think is good to be to have a single ASIC, be a participant in that. It's just louder, and they use a lot of energy. And these days you can get 3 to 4 GPU miners for one ASIC, right? I mean, you can put four units, 8 parts each, and use less than 3,400 watts of power. So the bang for the buck and the potential to be able to spec mine a new coin coming out, the ability to pivot where I'm not locked into one hashing algorithm like a ASIC. So, but being able to split that house, I think, is going to be the new thing. I think it's going to be a mix. Some people are doing some proof of stake nodes. I've seen some Flux nodes going out, people being able to stake Flux, Cardano nodes, and like having one ASIC, a couple nodes, and then like 2 your GPU miner. That becomes kind of like your mining and staking room. So kind of splitting that across and not putting all the eggs in one basket. I think personally that's what we're doing from a standpoint. But yeah, I don't see the GPUs going away.
Yeah, I thought Charles Hodgkinson said that they're looking at doing in some of the Cardano sidechain proof of work.
Yeah.
Side.
Yeah, when I talked to Charles, Hodgkinson about CES. I caught him actually out in the float. We were just walking. I had the whole BBT crew with me. We're walking through, and I was like, I think that's Charles Hodgkinson. Yes, that's Charles. You can't miss him. So I walk up and I'm like, hey, usually I don't walk up to just anybody, but you're Charles Hodgkinson. Say what's up. And we had a good conversation about proof of useful work. I'm like, you haven't sold me fully on Cardano. I've looked at a few things, but I'm more of like infrastructure, like tangible stuff that I can touch. And yeah, he had no problem going right into like, hey, look for like the concept of what what it's doing. We just found that we wanted to kind of go a different way on the proof of stake side, and then they started talking about the proof of work stuff. Yeah, it'd be interesting on side chains if they can implement that. I mean, it's unfortunate that they're not further along with it, because I think this kind of situation where these going to merge, what an interestingly side play that would have been to think, by the way, Cardano's launching a proof of work side chain. Ethereum miners come over and he could have just stole some of them under. But they just didn't play that out. And I know why, by and large, is like nobody knew if they're going to go live in September.
Yeah.
I mean, I was 3 months ago was like, there's no way they're missing all this. You have had OpenSea not saying that their stuff worked. None of the major dApps I have seen have came out and say we tested on the testnet. Not one of them. You haven't seen it. I've asked on Twitter. I've said many times on these live streams, which the internet loves to prove you wrong. So I'm like, please tell me, show me where one of the large dApps went out and said we tested proof of stake and it functions. We think they work good. Nobody said it. So we're just all walking into this from a YOLO standpoint. And they're like, well, it shouldn't affect the execution layer. Okay. Yeah, maybe the execution layer felt like, but if you lose like succinctness and you can't affect history because now you have a block assertion issue or you have to reorder, like, how is that going to affect you? Like, nobody will respond to it. So I think it's one of those, I'm just kind of seeing how it goes. So yeah, it's interesting, but
I still don't think it's gonna happen.
The, one more question.
How do you go about expanding your home mining operation unless you run out of capital? My house is getting too hot. If I build more rigs, I have to come out one everything. In general, how do you look for places to like put your miners in?
yeah, so the question for folks that are online, what happens when you overbuilt your house and you're producing more? So is it electric issue or is it a heat issue? Overbuilt.
I have enough electricity power going to the house to put more miners in, but my
Okay.
house is getting too
So it's a hot issue. So creating a hot and cold lane or a critical piece of it, anywhere that you can kind of dedicate to separate where that heat's going and capture it and then vent that out. If you have a basement area, it doesn't have to be permanent. This is one of the things I've mentioned on a few different videos is even doing like I've seen as simple as taking like a Lowe's rack or like a Home Depot rack, having all your miners on one side of it, taking that real thick plastic that you can get, like if you're actually doing home improvement in like a particular room that goes floor to ceiling, and literally strapping that up and having all your intake lane on one side, but then essentially cutting it and having it all taped against where your rigs are at. Capture all that heat and vent all that heat out. So you create like a little L in like a corner of a basement room that you can have a vent going out, create that negative outflow. So if it's like a basement window or any kind of thing like that, where you can vent that air out, you have an intake from the rest of your house, and then you're capturing all the heat, and then you're sending it right to the common area. You can capture that heat and create something that's not so permanent, because nobody's going to modify. Some people do modify their house to make it as like your own little mining piece there, or adjust where you have like a mining shed or something that's small, like those little sheds that you see when driving into Home Depot. They're like not that big, made for like lawnmowers and stuff. It seems smaller. And that's get the big one, they're crazy with it, but like get a smaller one and just have an area that's controlled there. You just have to work with the humidity and those kind of situations. Some of the people that we helped out there doing those is like it's more water control because it's not part of the house with the house filtering it out a lot better. But yeah, you got to capture that bottom line. And then if you can, and then you can vent it properly somewhere, then preferably outside, then you can get a lot more in. Yeah, if you're letting it out there, it's just gonna cook the room. Cool. Wrap this one up.
Yep, we're gonna go ahead and wrap up. So we're gonna move into the networking phase of the night now. You guys are free to hang around. Please finish the pizza. Help yourself at the beer at the bar. I've got wine and other drinks as well. So if you guys are just now joining us, also, I was gonna give another quick lineup of the events we've got going on the rest of this week. Cryptoworld Coffee is on Tuesday. We're gonna have Andrew. That's gonna be a Polygon event. That'll be a really good one to come to. Week after that, we're gonna hit it up with Cryptoworld Coffee again. The speaker's still to be determined. Oh, you know what? Actually, I think I have to go that. I'm just blanking on his name. It could be Mike Franco. He was here earlier. He's gonna be talking about the value of mining equipment hardware. versus the coin that you're actually working to mine. Really interesting talk, lots of math, really cool to take notes on. Next month too, we've got the Patreon exclusive event. If you guys like what we do in your crypto world, you like the free events that we put on, $20 a month gets you into our Patreon club. And what that money does is it allows us to continue to put on free events like this one. So if you're in it for the education, that would be the number one way that you can help us out. And then we thank you by putting on an exclusive event once a month. Yeah, that's it right there. After that, on the 22nd, on that Thursday, the 22nd, this is going to be our 1 year anniversary. We're celebrating 1 year of Cryptoworld being open. And if you're part of the BitsBeTrippin, and this is your first introduction to Cryptoworld, welcome. We are the world's first brick and mortar storefront. So you guys are actually seeing this on Back Room. The storefront is actually out there, and we are the one-stop shop for everything crypto. We sell, service, and manage mining equipment. We have all kinds of merchandise. We do one-on-one consultations, education, everything. So no matter if you're a beginner in crypto or if you're a veteran looking to improve and expand your mining operation, we can do it all. So we're very plugged into the space. We've got a huge network of very plugged in and experienced individuals where you can help everybody. We are here to be, quote unquote, rising tide that lifts all ships to bring about mass adoption with cryptocurrency and blockchain technology. I think that's about it. If you guys would like to hang around, grab a drink, say hi to everybody, meet some other people in the crypto community, shake hands with BitsBeTrippin. Autographs will cost you $5.
Yeah.
There. Thank you guys for coming, and we hope to see you at the next one.
How much is selfies?
Yeah, free. And yes, the lighting out there is not special effects. That is the sunset, and it is very unique.
Is that rain?
Yeah, it was a thunderstorm that came in, but yes, that is a very, very weird sunset out there. That is not the camera playing tricks on you guys. All right, we'll wrap this.